In the world of finance, we often hear about hedge funds and their complex strategies. But there's one powerful role you might not know about: the business development executive. These professionals are the driving force behind the most successful hedge funds, navigating the high-pressure environment, attracting capital, and shaping the future of the industry. In this video, we'll uncover how these unsung heroes are reshaping the finance world, and why their impact goes far beyond the traditional roles you're familiar with. Stay tuned to discover the most powerful job in finance you never heard of. Hedge fund power. When you think of hedge funds, you probably picture sophisticated strategies and algorithms driving enormous profits. However, much of the power behind these funds comes not from the strategies themselves, but from the talented individuals who execute them. Hedge funds rely on sharp, highly skilled professionals who bring in diverse approaches to generate consistent returns. These individuals can interpret market movements, analyze data, and implement strategies that can adapt to real-time conditions, making them invaluable assets. Their decision-making capabilities often make the difference between substantial profits and significant losses, positioning these individuals as the true driving force behind the industry's success. Without this talent, even the best strategy would fail to deliver the extraordinary results hedge funds are known for. The new elite in finance. Gone are the days when a finance career meant climbing the ladder through traditional channels like investment banking or private equity. The modern financial landscape has seen the rise of high earners from unconventional backgrounds, proving that pedigree is no longer a prerequisite for success in finance. Talented individuals who may not have attended Ivy League schools or worked at top Wall Street firms are now becoming major players in finance. Hedge funds, particularly multi-manager funds, are at the forefront of this shift, seeking out talent wherever it may be. These firms are now focusing more on skills, innovative thinking, and the ability to deliver results rather than relying on a candidate's institutional background. This democratization of finance has opened doors for a new generation of leaders, allowing diversity of thought to flourish in the industry. The multi-manager hedge fund model. Multi-manager hedge funds differ from traditional ones by allocating capital across numerous teams, allowing for a variety of decision-making approaches under one roof. These funds are structured to mitigate risks by maintaining a broad portfolio of strategies, each managed by separate teams with unique focuses. By having different teams oversee individual strategies, the multi-manager model ensures that no single bad call will dramatically affect the fund's overall performance. This diversity of thought and action has made the multi-manager model one of the most successful in the finance world today. Additionally, this model allows firms to attract specialized talent, as each team can focus on their specific area of expertise, contributing to more stable, risk-adjusted returns that often outperform traditional hedge fund approaches over the long term. The rising demand of BDEs. As the multi-manager hedge fund model continues to grow, so does the global demand for business development executives. These professionals play a crucial role in identifying investment opportunities, attracting capital, and building relationships with clients, acting as the face of the fund for investors. Business development executives are often among the highest-paid individuals in hedge funds, earning substantial compensation packages that reflect the critical nature of their work. However, the pressure is immense, as they are responsible for driving revenue growth in an increasingly competitive market. Success in this role requires not only a deep understanding of finance and investment products, but also excellent communication skills and the ability to navigate complex client relationships. In a fast-paced, results-driven industry, the stakes are high, but for those who excel, the rewards are even higher. In-house recruitment teams. To keep up with growing competition, many hedge funds have started developing internal recruiting teams. These teams are designed to reduce costs associated with external recruiters and consultants while providing specialized support to investment management. By building a robust internal pipeline, hedge funds can more effectively manage talent acquisition, leading to better investment decisions and, ultimately, higher returns. Internal teams also offer the added benefit of being closely aligned with the firm's culture and strategy, allowing them to target the right kind of talent. This innovation in recruitment not only saves on costs, but also speeds up the hiring process, enabling funds to remain agile in a fast-moving market. Moreover, having in-house recruitment teams allows hedge funds to nurture long-term relationships with potential hires, ensuring they always have access to top-tier talent when needed. FTC's ban on non-compete agreements. In a groundbreaking move, the FTC, Federal Trade Commission, recently proposed a ban on non-compete agreements. If enacted, this ban could revolutionize the hedge fund industry by increasing talent mobility and providing professionals with more opportunities to explore new ventures. High-performing individuals will be freer to move between firms, fostering innovation and allowing companies to better align talent with their evolving needs. The removal of non-compete clauses could lead to a more fluid and competitive labor market, where firms must offer greater incentives to retain their best employees. As the talent war in finance heats up, hedge funds that can adapt quickly by offering competitive compensation packages and dynamic work environments will be in a stronger position to attract and retain top talent, enhancing their overall competitiveness. The talent war. Hedge funds are locked in an ongoing talent war, pushing salaries higher and increasing competition for the best professionals. As the demand for specialized skills continues to rise, firms are willing to pay a premium to secure top talent, leading to some of the highest compensation packages in the finance industry. This has created an aggressive hiring environment where firms are constantly on the lookout for new talent to maintain their competitive edge. The battle for talent is not only about salaries. Firms are also offering more perks, better work-life balance, and opportunities for rapid career advancement. To thrive in this landscape, hedge funds must continue to innovate, offering not just high salaries but also pathways for personal and professional growth, as well as a workplace culture that fosters creativity and collaboration. Pass-through fees. One area of growing scrutiny in the hedge fund world is the practice of pass-through fee structures, where funds charge investors fees for operational expenses in addition to management fees. These costs can significantly impact returns, making investors increasingly wary and more selective about where they place their capital. As fees come under closer scrutiny, hedge funds are being forced to justify their pricing or risk losing investor patience. Transparency has become a key issue, with investors demanding a clearer understanding of what they are paying for and how it impacts their returns. Funds that fail to address these concerns may find themselves struggling to attract and retain capital, especially as more investors prioritize cost efficiency in their decision-making process. Dominating the market. The hedge fund industry has seen a growing concentration of capital flowing into top-performing funds. These elite funds are not only dominating investor inflows, but also driving competition within the sector. With more capital at their disposal, these top firms can attract the best talent, further strengthening their position. This creates a cycle where top funds continue to outperform due to their ability to secure the most skilled professionals and deploy larger sums of capital more effectively. Smaller funds, on the other hand, often struggle to compete, as they lack the resources to attract high-caliber talent or invest in cutting-edge technology. The concentration of capital in a few dominant players is reshaping the hedge fund landscape, centralizing competition and making it harder for new entrants to break through. Adaptability is key. In a rapidly changing financial landscape, continuous evolution in hedge fund recruiting is crucial for long-term success. Firms need to remain adaptable, embracing new strategies to attract and retain top talent. This means not only offering competitive compensation packages, but also creating a work environment that fosters innovation, collaboration, and growth. The recruitment landscape is also shifting toward a more data-driven approach, where analytics and technology play a crucial role in identifying and securing top talent. As competition intensifies, only those who stay ahead of recruiting trends and leverage innovative tools and practices will thrive in the high-stakes world of finance. Hedge funds that invest in their talent pipeline today will be better positioned for long-term success in an ever-evolving market. As we've explored, the world of hedge funds is driven by more than just strategies. It's powered by the talent and innovation of individuals, especially business development executives. These professionals are at the forefront of shaping the future of finance, managing relationships, attracting capital, and navigating the ever-evolving challenges of the industry. Whether it's the growing demand for talent, the rise of multi-manager models, or the impact of regulatory changes, the role of these executives is only becoming more critical. Thanks for watching, and if you found this video insightful, be sure to like, share, and subscribe for more deep dives into the world of finance.